Hey everybody, welcome to Trading Capital's Exclusive Analysis. Jumping to the S&P 500 daily chart, it was a remarkable rally across all the major indices today. Today the Nasdaq did lag a little bit with some weakness in your semiconductors, but looking at the S&P 500, what a remarkable last three trading sessions it has been. 1, 2, 3 bar surge on the daily chart, retesting this massive Friday sell-off that really came out of nowhere. And what I am personally observing on the overall chart is exceptional bullish price action. I've been telling my members to buy the dip. We closed basically the majority of our shorts down at these lows, started buying key stocks down in this vicinity, and it has been a remarkable bounce to the upside. If we look at our SPY, we've already closed our 665 SPY calls for a lovely win. But what I want to show you on the SPX is how high are we going to go? Considering that we now have that head and shoulders formation that has been negated since we've closed above not only this neckline, but this neckline, you seemingly have a failed bearish pattern on the S&P chart. Next clear resistance that I see is going to be this downsloping trend line. Now, will I be shocked if the market tap that trend line by the end of the week? I absolutely would be. I would like to see a little bit more consolidation for the inevitable pattern to go higher, but what I'm personally observing on the overall chart is exceptional bullish price action, and what we could be unfolding here, guys, is a potential large inverse head and shoulders. We have a left shoulder, we have a head, and now we need to see if we can build a right shoulder formation to basically break us out to new highs. Intraday, if I erase all of these key trend lines here and just simplify the chart, one of the bullish moving averages that we got a close above today is your blue moving average, which is your 20-day moving average. The fact that we're now above that key technical moving average, that only instills, once again, more confidence in the market. And if we get a secondary candle close above that area, we are going to see more people pile in on the long side and chase this overall trend higher. Once we get through this downsloping resistance trend line, the next key resistance that I think is going to come into play is this really interesting parallel channel. I think the markets are probably going to be chopping inside this channel for a number of weeks. What does that mean? That likely means we could easily push to 6,900 on SPX. And what also supports the backdrop of higher market price is simply the big Fed expectation rate cut. 82.7% chance of a December Fed rate cut yet again. You also have the long end of the curve, super soft, the 10-year yield basically flailing around and having a failed potential bullish pattern here, dumping to the downside. You've had the Dixie soften in price back below the 200 moving average. You've had gold basically chopping sideways, not really doing too much today. You've also had crude oil soften quite substantially in price, and then you also have natural gas pulling back exceptionally well today and bouncing off the 20-day moving average. So you have all of the major drivers in place that supports higher price action. Soft yields, a little bit of a softer dollar, gold chopping sideways. You also have crude oil weak and the whole energy complex weak as a whole. So all of the tailwinds are in place that support higher price, but we do want to see a little bit of consolidation. Now, if we go to the hourly chart of SPX, what's really fascinating about this hourly chart, and let's just simplify things, we'll turn up all the moving averages so we can identify the patterns. We potentially already have an hourly inverted head and shoulders that could be coming to fruition here. I would like to see a little bit more of a right shoulder, but I discussed this in the live trading, we have a flat top neckline that the SPX is trying to break out of. And if we do the measured move of this hourly chart formation, we have a very high substantial target on SPX. Take a look at this potential target on SPX. That gives us a breakout target of 7,000 plus SPX. That would be astronomically beautiful to see because we are positioned net long really since we got that major sell-off. Nevertheless, please give this video a like down below and we'll see you on the charts a little bit later. Hey everybody, welcome.